at Metropole TVKE across all your social media platforms. We are still on Mad Economic Review. Good. Just before we went on break, we teased what our next issue is. This is it then. Bamboo Cement weathered the effects of the coronavirus pandemic on the economy to see its profits jump to 1.1 billion shillings in the review period, up from 359 million shillings the year before. The cement company, which attributes the performance to a reduction in operation and finance costs, has now resumed dividend payouts at a time when most NNC-listed companies have been revising the dividends downwards or cancelling them entirely, with the cement manufacturer proposing a 3 shillings per share dividend payout. Bamboo's share price had crashed to lows of 19 in September last year before rising to the current levels, and this at the current levels 43 shillings. However, Bamboo Cement's consolidated sales declined 5.1% to 34.8 billion shillings, but costs fell by larger margins, resulting in the profit growth. Total operation costs fell by 2.5 billion shillings, or 7%, to 33.1 billion shillings. Look, let's look at that data, therefore, this morning, before we cross over to Rufus and Collins. All right, let's look at what have been their key performance indicators in the year ended December 2020. And this is the data that we have for you this morning. You can actually see that in terms of the key performance indicators, profit before tax and profit for that entire period. You will see exactly what that is. And those are for the half year 2020. All right, let's cross over to their full year profit indicators. That is their profit trend as well. You can actually see where they are in terms of 2017, 2018, and 2019 as well. What we know that profit for 359 has more than tripled now to 2020 to 1.1 billion shillings. All right, let's cross over to what has been the recent trend in terms of where the close as of yesterday. Let's cross over to NSC top gainers level, which you're going to see again. As of the day before yesterday, they were at 38 shillings and 0.5 of a cent. Currently, they start trading today at 43 shillings and 15 cents. If you put together what that price change is, then you will get a 13% increase in their standing. Collins, does this result translate to the resilience of the real estate sector within the pandemic, or just Bamboo Cement?
Thank you so much, Charles. One, allow me to apologize for my poor connection earlier. I hope you can hear me now.
Yes, we can, hopefully now.
Thank you. It's looking so beautiful for Parliament, raking in a profit before tax of 1.12 billion, rather 114% increase, and after tax 1.12 billion. I don't think this is because of that sector doing better in this period. I think it's just unique to Bamboo Cement, because most of the profit is coming from subsidiary in Uganda. Actually, if you look at it, the name of the company, I think it's called Bamboo Cement. And most importantly, it's because their strongest market is in Rwanda, and so they keep trading in Rwanda. The border between Uganda and Rwanda has facilitated this trade. The returns that we're seeing. And you will reckon that last year, when they had the losses that they were issuing this statement, was because of the restrictions that were put in place in the border of Rwanda and Uganda. When Rwanda was on a lockdown, so the border was somehow closed. That hampered that trade. But then when this was lifted, I think they were able to be seamless.
I'm so sorry. We are back again to the same problem. We're really struggling. Your audio keeps on dropping and getting back. Let's mute you for a couple minutes as the sound team really tries to figure what is going on with your connection from your end. Let me cross over to Rufus this morning. Rufus, I'm going to put the same question to you. It's unfortunate that we can't continue with Collins with his connection. Rufus, is it specific to Bamboo, as Collins is alluding just before we lost him, or just the resilience of the real estate sector?
I would say that when you look at the current situation and the current time that you're trading in, there's a couple of factors that have been working to the advantage of Bamburi and also other companies in the sector. So some of these factors include one, at the beginning of the pandemic, around January to March 2020, a lot of central banks were able to lower interest rates in order to stimulate the economies. So these lower interest rates have been really benefiting companies, not just Bamburi, but companies in the entire stock market. So besides this, there's the issue of oil. At the beginning of the year, last year, 2020, there was a price war between various countries, especially what we call the OPEC plus countries, the oil producing and exporting countries.
Yes.
And this price war, where the countries were producing oil in excess, flooding the market with supply, which drove the oil prices down. So when you look at the unique factors surrounding Bamburi, one of their products, which is cement, has a very bulky situation. It's very bulky to transport, and it really depends on the cost of transport in order to price their products. So with the very low oil prices, they were able to distribute their products to their clients at lower costs, which in turn raised their profitability in the long run.
Yes.
So in the year 2020, they were able to perform really well, mainly because the price of oil was very low.
Yes. Pretty much. Could we also comment on what was going on in the country, especially under those tax measures that we were under, that were especially supposed to cushion the economy from the effects of the COVID-19 pandemic? How integral were they as well in their performance?
So in terms of taxation,
yes.
lower taxation really helped them, especially with the pay as you earn, from two perspectives. So one, in terms of the amounts that they were remitting to the government, they were much lower with, compared with what they would do in previous years. On the other side, when you look at the client side, that is their customers, they were paying less taxes. It means that they had more money to consume. So with more money, people would buy more of Bamburi's products. So for instance, the middle class in Kenya, they had much lower taxation. At the same time, there was lower expenditures. For instance, if you consider that the COVID-19 regulations, they closed all the entertainment joints where people could literally spend their money, it means that people had more money in their pockets to spend. At the same time, people were able to spend more time at home with their families. And when you spend more time, you start getting ideas to develop. For people who have been saving, they found time to do or engage in construction. And also one key factor that is really important to Bamburi is the current government initiatives. So if you look at the Jubilee administration, they have been really trying to develop infrastructure across the country. And this infrastructure has one key raw input, which is cement.
Yes.
So the country has really done well in terms of developing infrastructure, and this has created a very high demand for Bamburi products. So investors who knew about this had really made some good bets in this stock, and by buying more of this stock, they really put it much higher in unison with the fundamentals, which are showing that the company is raking some good rewards, having closed over 1 billion mark in terms of profits.
Yes. Collins, let me bring you back. Hopefully now we have it settled. Collins, you hear what Bufos is saying? Well, they just came in at a better time. I mean, saying, well, the government was into deep infrastructural projects. It was during 2020 when fuel prices recorded their lowest across the world. Were they one time lucky? Because if you go back to 2019, Collins, you'll find that share price crashed to just 19 bob. Now they're talking about 43, and we expect that to rise as well.
I don't think it was a one-time luck.
Yes.
If you look at the Jubilee government and the kind of projects that the Jubilee government has been putting in place, all of them have been geared towards infrastructure.
Yes.
If it's not housing, if it's not about expansion of roads, and all this, in one or the other, need the supply of cement. The other thing is, you'll remember, this sector has faced a lot of competition.
Yes.
The other time, I think, about the unfair competition where one market player was selling cement in very low place. Yeah, but it's still even at the expense of that, we are able to see that they are remaining afloat. I don't think really that they were lucky, but even if you look at the projections, moving forward, I think the projects that are in line, LabSet project, talk about the expansion of roads projects, talk about the project from Bagamoyo in Malindi all the way to Tanzania. All these are geared towards empowering this sector. But why is it only Bamburi segment that is doing well? That's the question that we have to ask. I think at the onset of COVID-19, Bamburi had a plan on how to remain up. They had a plan on how to come from the shock and how to move forward past the shock. You remember the other players who get to go Lawrence, they've been unable to supplement because I think they took so much that they could not swallow. But for Bamburi Cement, as I keep saying, actually, I think these returns can highly how their company are really fairly. That's what are the questions.
Pretty much. All right. Well, was clear for us this conversation then. Let's jump again to that NSE data on exactly how they closed yesterday. And you will see, Rufus, I mean, wow, that's the market reacting to something that is just a positive note. It's a positive sentiment in corporate Kenya. I mean, in 2020, we can actually say that Bamburi Cement won the war of the coronavirus pandemic disruptions. Rufus, in 45 seconds, let's look at that data again on exactly how they closed yesterday. From 38 to 43, a 13% increase. Do we expect that to continue from Bamburi as 2021 trading continues, or that is just a short-term reaction of the good things happening for that specific company?
I would say that investors are really betting on the future performance of the company.
Yes.
So when you see the current market price rising very sharply, I would not say it's based on the current results, but the future expectation the company is going to continue with this kind of stellar growth.
Yes.
So with the current fundamentals that we're experiencing right now, interest rates are still low. If you look at the government research infrastructure projects, they are still expanding. And now we are approaching a region whereby after we get the vaccinations, we are going to go into full business. If you look at the housing market right now, it's rising because people have money. A lot of people have saved a lot of money during the pandemic, including businesses, and they're engaging in construction. So this new rise in demand is going to create some more demand for Bamburi products, and investors are really betting on these. So when you see the current prices rising, I would say they are highly speculative, betting on the future performance of the company. However, in terms of continuation of this growth, there are key concerns to look at. One is the rising dollar rates.
Yes.
So the dollar rates are kind of rising over time, meaning that the Kenya shilling is losing value. And when it comes to Bamburi per se as a company, they also engage in imports of various inputs for their products, and these inputs are getting more expensive by the day. So unless the exchange rate and the strength of the Kenya shilling is checked, then it could be a concern to investors. So the other key factor is the rising oil prices. So ever since the beginning of the pandemic, when oil prices were very low, they have been rapidly growing. If you look at the current rates in the international markets, we are rapidly moving towards 65 and hopefully in the range of $70 per barrel. So when oil prices are getting more and more expensive, then it's a higher cost for the company, then the revenues might be a little bit lower in future.
Yes, pretty much.
So one last point
Yes.
is the issue of rising inflation. So in Kenya, we're experiencing some rapidly growing inflation, and this inflation is basically going to make products become expensive. So when products become expensive, then a little bit of revenue might be taken away from Bamburi based on the inflation we are currently experiencing in Kenya right now.
Pretty much. Professor Collins, let's move on to the last issue that we have for you this morning, where data from the Central Bank of Kenya now shows that the banking sector deposits in January hit 4.03 trillion shillings, translating to a 12% jump from the 3.55 trillion in the similar period last year. Now, the deposits' latest jump is also the highest in over a decade, with a figure at 224.6 billion shillings a year before. Now, the savings hit this high level at a time when the corporate sector experienced uncertainty over the stability of jobs, with layoffs and pay cuts synonymously used as the survival tool for most companies in the economy. Let's look at that data this morning just before we take quick sentiments from Collins and Rufus this morning. And you can actually see that jump in terms of those deposits in the commercial banks in the country. Collins, does this speak to the thin investment opportunities and reduced spending during the COVID-19 pandemic?
During the COVID-19 pandemic, the only gospel that people have been preached to is that save as much as possible. We've reduced our expenses. We've reduced our expenditure. We've reduced our projects, cost of projects that are going to that. The budgets. We've had a lot of companies that are laying off employees. We've had a lot of companies that had to resort to measures that see to it that they cushion themselves.
Yes.
And so I think this is coming to the backdrop under which now you are saving because of necessity, not because you don't have needs, but because you have to. You know, the uncertainty that has come with this pandemic has forced us to resort to save so that in an event, whatever happens, you have at least a reservoir where you can draw back your money from. So I look at it in that way.
Yes.
I look at it in the way that people are just hoarding the money because of the uncertainty.
Collins, before I jump to Rufus, isn't there also another side that we should be looking at, that, well, if indeed the Labour Department is true to the 1.72 million jobs that we lost, that's one, and a lot of people are going through salary cuts, and that's the second point as well, that the corporate sector used to survive the COVID-19 pandemic. Shouldn't the deposits have reduced on the back of that, Collins, or that figure can be looked at, it balanced out?
They should have decreased, and I want to put whatever thing you've said into perspective.
Yes.
But that is not going to be reflected now. That is going to be reflected looking into 2021, because now you remember there are people who've been paid off. There are people who whatever thing you had saved, now you have to put it in the bank. There are companies that have to withdraw people, rather to send people back home. That money that they had saved, and they're putting it in the bank. But then that cost will have to be reflected next year when the number of people who've been unemployed, they've actually run out of the money that they had saved. Because now you realize you're being told do not invest your money into anything. The investors are out of the market now because of the uncertainty of COVID. And so this money is being taken back to the bank. But then throughout the life of this pandemic, we'll see a situation whereby this now will keep coming out now.
Yes.
Right.
Pretty much. All right, Rufus, in 2 minutes, if you may, as well. I mean, what we're showing you right now is actually the performance of the short-term and long-term T-bills within the economy. We can actually get back to there, Yvonne, if you can. So we take a 1 minute sentiment from Rufus as well. If indeed that data that we're showing right now, Yvonne, if you can, jump to that data, so we can actually see how the T-bills performed. Good. It's the one that you showed before that. If indeed we are talking about investment avenues that were opened within the COVID-19 pandemic, Rufus, does it talk about the lack of market information on where you can put your money in terms of investments within the economy? Because we are talking about how the government has also been money hungry during this time.
So I would say Kenyans are very, very hardworking. So since the beginning of the pandemic, when people were forced to work from home, a lot of people did not just go home and then sit idly. People got creative. They came up with new solutions in order to survive this pandemic. So some of the things that happened, people were able to learn new skills, especially the online skills. If you look at the number of blogs, they have gone up. If you look at investments in the forex market, they really went up. Because considering that you can actually trade in global financial markets from the comfort of your home as long as you have an internet connection and also a laptop or any internet connected device. So at the same time, if you look at the cryptocurrency markets, out of Kenyans started learning, understanding who they are and investing in those markets. So Kenyans are really creative. They went home, they learned new skills, and then they created new revenue streams. So in terms of investment, it was really difficult to invest in physical businesses because there was no customers, there is curfew. So people had to find new ways of investing their money.
Yes.
So they went for online trading in the stock markets. And also when you look at the local stock market, it's also doing quite well. And new products have been introduced into the market. So if you look at what we call derivatives markets and also futures markets, we've introduced these in Kenya. You'll be able to trade a couple of shares in derivatives markets. Currently, I think we have 6 companies to start with. That is, we have Safaricom, we have Equity Bank, KCB, we have East African Breweries, and at the same time, we have the British American Tobacco Company. So with these companies, you will be able to trade in their futures contracts, and at the same time, you'll be able to benefit even when the stock prices are going down.
Yes.
So new inventions and taking advantage of the digital space has become our new reality. So if you are an SME, you've been working in your business and you are forced to work at home, then these guys were able to take advantage of the e-commerce platforms. They are making their sales online. So there, I would say the revenues are going up. And also when you look at the banking deposits, they are reflecting kind of the same information.
Yes.
So in terms of working from home, people are able to save the money that they would otherwise use for transport. Having to work from home, it means that you spend at home. If you are working at home, you're buying food at home, which is much cheaper compared to buying food from the office. And at the same time, when you consider the schooling situation, for a whole year, the parents were not paying school fees for a majority of the education sector in Kenya. So all that money was saved and invested in various sectors in the economy. So since businesses are not running very well, then the digital space has been the one that has been benefiting from all these kind of excess supply.
Yes, pretty much. Rufus Kamau, research and market analyst, Scope Markets, Collins Lodge, who's a lawyer and economic analyst. Thank you very much, gentlemen, for taking your time this morning to speak to us here at Metropole Television. You've been quite invaluable. And on that note, we come to the end of a Business AM this morning. Good morning.